Hello traders, the title of the video is sElliottWave Genius, how to unleash the sElliottWave Genius in you. Alright, let's get started. So we want to wake up that sElliottWave Genius in you, so you may start improving your sElliottWave account. Alright, talking about sElliottWave Genius. Alright, so if you are counting waves, alright, on a higher time frame, you can use the next lower time frame, okay, to check the internal waves. The reason is it's quite easy to identify the waves on a higher time frame, but sometimes one can quickly fool oneself, especially if you are counting wave on a yearly chart like this. Sometimes you may call something third Elliott wave, especially the third Elliott wave. That may not be the third Elliott wave. Or you may think that the fourth wave is not yet completed, or the fifth wave is not yet completed, and you can get into trouble. So the point I'm making, in order to wake up that Elliott wave genius in you, all right, is when you are counting wave on a higher time frame, especially like a yearly chart, you need to go back down to the lower time frame to check the internal wave that will help you to validate your higher degree wave count. On the other hand, if you start counting a wave on a lower time frame, like a monthly chart or daily chart, you need to go to the corresponding higher time frame to validate your lower degree wave count. So we talk about the secret of Elliott wave count. We use the ratio 1 to 22. All right, so that's the first video on our website, on our web page, on our home page at www.24elliottwavesyoutube.com. All right, ratio 1 to 22. So your lower time frame is 1 minute. Your corresponding higher time frame is time 1 minute times 22. That will be 22-minute time frame. All right. So now I'm on a monthly chart. There's something here, so if you count in wave here, what will you see? Look at it for a second and let me know what is the first wave, what is the second wave, what is the third wave. There's nothing wrong here. It's very simple. Have you finished? Okay. Now, a lot of traders will say, Joe, this is the first wave of a higher degree, and we have 1, 2, 3. This is the second wave of a higher degree, and this is, okay, the third wave. We are now in the fourth wave. That's what a lot of traders will say. Then I will say, hold it. Haven't I said to you before? Now, I'm not patronizing you. Don't take it that way, okay? Haven't I said to you before that when you see on a yearly chart a third wave with a long antenna on the top like this, you should be careful? Now, the point I'm making here is that when you see on a yearly chart like this, and you call something like this as a third wave, if you see those long, okay, shadow on top of the candlestick bar, that should ring the bell, give the warning that probably the fourth wave is already completed or the fifth wave is already completed. Will that help you to wake up that Elliott wave genius in you? Now, going back to the discussion today, we say when we count waves on the higher time frame, we must now go back to another lower time frame to see the internal waves, okay, that will help us to validate our higher degree wave count, yes or no. Now, following our guidelines that we put in a stone, right, so to speak, at 24elliottwave.com, you may say, a lot of traders will quickly say, George, are you blind or what? The second wave has cancelled the first wave, we must start counting here. And I will say, yes, I agree. But then we will also say to traders that in one particular video, I say to traders, a lot of Elliott wave practitioners out there, their interpretation of the second wave is that the second wave can go all the way to the starting of the first wave as long as it does not go below the low of that first wave. Huge numbers of professional Elliott wave traders will tell you that there's nothing wrong with the second wave. But following our guidelines, I disagree. No, I disagree. Yeah, I disagree. Why? Why I disagree? Because why A trend that is about to begin, the second wave should come all the way to the beginning of the first wave. It doesn't show a commitment of the first buyers because the first wave is the signature of the bull. Therefore, to help us avoid Elliott wave mistake, we want to discount that first wave. Why they should cancel it. So you were right to spot it here that it come to the beginning. So following our guideline, we will say to those who call this first wave, second wave, okay, it's your wave count. We will not ignore your wave count. We'll take that into consideration because we do not want you to mess up our wave count. But we will start counting our wave right here. Okay, so is this one the first wave now of a higher degree? No. Now, if you're calling this one first wave of a higher degree, all right, you want to go back again to the next lower time frame to validate what's going on here. So the yearly chart will connect if you can. Okay, practically trading, normally we should use ratio 1 to 22, but practically speaking, because 22 months, all right, is more than a year. So well, we don't have 22-month chart. So we connect the yearly chart to the monthly chart, though the exact ratio is 1 to 22. Okay? So avoid those mistakes. If you're calling something third wave on a yearly chart time frame, or you call anything third wave, you don't want a third wave with a shadow on top of it. It's not a signature of the bull. The third, especially bullish third wave. We don't. If you see like this, try to investigate. That's all. Now let's go to the monthly chart. Am I waking up that genius in you now? And then we're going to start counting wave following our guidelines of 24ElliotWaves.com. So we will notice that if we say there was a trend for 1993 or 94 up to 1998, there was a correction in 1998 that has ended here, bringing the price to the starting point. So for us, we will say this is a cycle point, and there's a high chance that a new trend may begin here. So we are here now, just before 2008, before 2009, right here. All right, but then the price form a kind of a double bottom chart pattern. Among us, those who are following our guideline, they will say that George, in fact, the first wave has started here, all the way up here, something like that. 1, 2, 3, 4, 5. Maybe. Other trader may say it's from here after the first higher low. You retest it at the cycle point, and this is it. And they may say first wave, first minor wave of the first wave, second minor wave of the first wave, and some trader, again following our guideline, we say that it has cancelled it. But there's no big trouble here. The trouble is, the agreement is that this session is part of a first wave for sure, whether you call it from here or here. Prefer to call it from here, our first wave. Feel free to disagree in 2009 on the dot, right from a double bottom there. Oops, hold on please, traders are banging their table, I can hear you. Joe, you're drawing a line again. Joe, you're drawing a line again. Why don't you use the stupid numbers? And I say, sorry guys, I'm getting used to this one now. So we see that's the first wave. Our second wave is coming here, my friend. And then we say the third wave has been subdivided into 5 minor waves. 1, 2, 3, 4, 5. So third wave ending right here. So you may say, Joe, that's wrong. And I say, well, that's my wave count. Leave me alone, please. Leave me alone. Hold on, please. What am I doing here? Oops. Okay. Alright, so end of our third wave and the fourth wave. So remember what we were saying on the yearly chart, that if we discount that first wave and think that the second wave has cancelled it, and we start counting our wave here. Should we call that bullish move, first wave of a higher degree? All right. So this is it. Fourth wave, and this is the fifth wave. What's going on now, my friend? What's going on? What's all this now? Looks to me there is another move up. Is it a correction of this one? Is it a flat correction developing now? Or is it a higher degree wave count? What? So let's go back again to the monthly chart, to the yearly chart. So other traders saw it like this, so we don't want to ignore them. They say first wave, second wave. They say it did not cancel, it can come to the beginning. And those traders may say, your 1, 2, 3, 4, 5 wave that you have seen on the, all right, on the monthly chart is the third wave of a higher degree. So first wave of a higher degree, 1, 2, 3. Second wave of a higher degree, and your 1, 2, 3, 4, 5, George, is the third wave of a higher degree. And I say, all right, let's go back to the monthly chart. Okay, so in that case, we'll say fourth wave of a higher degree, followed by the fifth wave. Okay, hold on, please. Oh, we have to change the color now because it's a different wave count of a higher degree. So we're going to change it now into pink. So the pink one is the higher degree fourth wave, followed by the fifth wave of a higher degree. And we'll change the color again to pink so you can differentiate between the internal wave of the third wave. All right, so and then here we have our third wave of a higher degree. We need to change the color also into pink. Good, right there. And our, hold on please. You want to wake up that genius, Elliott genius in you. This is the second wave of a higher degree according to our friends. All right. And this is our first wave of a higher degree. Also, we should color it into pink. So first wave of a higher degree, second wave of a higher degree, all our 1, 2, 3, 4, 5 is stopping here. Okay. Now forming, okay, the third wave of a higher degree, which is the pink one, followed by the fourth wave of a higher degree, the pink 4, and the fifth wave of a higher degree. So what is happening here? Are we going to have a fifth wave extension? Anytime we think of third, fifth, and first, we should think of extension. So now you can see that, oops, here we are. According to our guidelines, we are stuck here. The impact is here. That's the end of our fifth wave. 1, 2, 3, 4, 5. Now, the disagreement is coming up because when we go to the yearly chart, so our wave count here so far is good, all right, fine. Though there is a little bit of disagreement when it comes to the higher degree wave count because following our guidelines, we can see that this one comes to the beginning of it. Now we have all this tall move all the way up here, followed by, okay, this move coming down now. What is happening, my friend? Okay, so it's up to you. Do you want to go along with those who call it like this, or do you want to discount the second wave count? Now, the question we can ask also, what is the difference between these people talking about higher degree wave count and us? All right, that's a very good question. So those traders, according to those traders, we are now in a fifth wave. All right, fifth wave. Okay, is their fifth wave? What about it? Yep, their fifth wave is ending here. On a monthly chart, we see one impulse wave ending here, and we expect a correction. So if we are thinking of a higher degree wave count, all right, it looks to me on a yearly chart that we cannot call all this the third wave. We cannot call all this the first wave of a higher degree. All right, we cannot call all this. The point I'm making here is that when we go to the yearly chart, we cannot call all this move from here all the way up here as the first wave. It doesn't make any sense at all. I think a lot of people will, will agree with me that we cannot call this a tall move from the zone of $10 up to a $90 zone as the first wave. Ridiculous. So it looks to me at this point that those people here, this is what we are talking about, a lot of professional traders did accept that this is the second wave, though according to our guideline, we should discount this move down here. There was a question before, a trader asked me when the second wave got a tail and come to the beginning of the first wave. This is, I would say, this is a scenario here. After we go around, we disagree with those traders, and we reluctantly start to agree with them and say, all right, let's go with it and see what will happen. All right, here it is. This is one example here. Is that it? All right. Let's go back again to the monthly chart. This exercise, we are trying to wake up, that Elliott wave genius in us. All right. It came to the beginning of it. All right. Or we can go around and turn around and say, all right, we disagree with you. We're not going along with you. Our higher degree wave count, all right, is here like this one. But if we go to that exercise, we're going to say that our monthly wave count all the way up here is corresponding to a higher degree wave count. So in that case, if we disagree or we ignore this as a first wave and we continue with the other people, we may turn around and argue that, which they will find really funny to accept, that in fact the trending fair has started here and it's not easy to see the internal wave of the higher degree. We can argue that. They probably form a double bottom here, and the trending first of a higher degree on the yearly chart is corresponding almost to what we have seen on the monthly chart. But there is a problem. So you may say, Joe, you're just going round, arguing with yourself. And I will say yes. And sometimes we do that because you're going forward and backward, try to make sense of your wave count, and this is what I'm doing here. Now, to put the matter to rest, I will go along with those traders here that there was a trending first up to 1998, and that correction was a bit vicious. Shouldn't come to the beginning here because you can see that there was a first reaction here. You see, we may say that this move to come all the way here was a bit of exaggeration. We can argue that way. See that the correction in fact did not come all the way to the beginning, that the first reaction did stop here, did not come to the beginning of the trending first, and there was this bounce up. But the next move was a bit of exaggeration as the smart money want to buy, at a cycle point. We may argue that they say, the correction in fact, that's the correction ending here. This is a bit of exaggeration, a bit of distortion, and we go along with our friend that are calling this one the first wave because I could not agree with myself that all this move up here is the first wave. So therefore, we go along with them and say, all right, you won this time. For the first time you won, though there's a bit of a question mark on this second wave right here. We go along with them and call our 1, 2, 3, 4, 5. Okay, the third wave of a higher degree. For the fourth wave, we are now in the fifth wave. As you can see now, the RSI started disagreeing with the price action. A divergence is appearing, so we use the RSI, okay, after the fourth wave is completed. So if you are a monthly chart, as we were before, and you count the wave, first wave, second wave, third wave, fourth wave, and the fifth wave, paying attention to the red numbers. Now you are stuck here. What will be going through your mind? You will say 1, 2, 3, and you will be applying what? The Fibonacci. So we want to go through all this. So you will be applying Fibonacci extension to our fifth wave on the monthly chart. Yes or no? Fibonacci extension to that fifth wave on the monthly chart, and you will be highlighting the level of 138.2% Fibonacci extension. So though we disagree with other traders at the beginning, so if you want to go along with our wave count, you say that this is it. Okay, there's no big difference between the yearly chart and the monthly chart. That in fact the trending fair has started in 2009, and either a higher degree or lower degree, we have first wave, second wave, third wave, fourth wave, and a fifth wave. And what is taking place here, George, is a flat correction, 1, 2, 3. Okay, and now we are now at in the zone of 138.2% Fibonacci. Okay, extension level of that first wave, and the price is coming down, forming 1, 2, 3, 4, 5. So you will be expecting a flat correction at this point in time because you disagree with traders on the yearly chart, or the yearly chart sub-waves are not very clear. So you'll be expecting a flat correction. Suppose you are that type of trader that is accepting that we are having a flat correction that is developing here. The next thing that you don't want to do, or the mistake that you don't want to commit here, is to ignore those crazy traders that are calling this one first wave and second wave of a higher degree. If you tend to accept that this is a flat correction happening here, you need to understand that those crazy Elliott wave traders may be right, and at the end of the 1, 2, 3, 4, 5, you should be prepared. You should set your mind to agree with those traders, expecting, all right. No, that's not correct. So you will be thinking, because their fifth wave is ending here. So when you see this 1, 2, 3, 4, 5, you will say that's the first part of the correction. All right. And what will be going through your mind is that, the correction may be complex, all right, and the price may bounce up and so on. So the pattern that will come into your mind probably will be a zigzag, because you see 1, 2, 3, 4, 5. Now you think that your flat correction is completed here, but at the same time you are adjusting your mind to agree with those other traders that count their first wave here. So you'll be thinking in their mind, in the mind of those traders that call this the top of the fifth wave, instead of here, they see it coming down 1, 2, 3, 4, 5. Those traders will start thinking of which pattern? The zigzag pattern. So 1, 2, 3, 4, 5. You are satisfied that your flat correction is completed. Those traders will be thinking that, all right, that's the first leg of the correction, subdivided into 5, flashing into their mind. It's a zigzag pattern. 1, 2, 3, 4, 5, 1, 2, 3, and then 1, 2, 3, 4, 5 down. So you will be thinking of a zigzag pattern forming their corrective first. All right. This exercise, going to the mind of other traders, weighing it from the left to the right, seeing it from different angles, will help ones to unleash okay, the Elliott wave genius in oneself. All right. I hope I have been useful. I've touched the key point that you need to look for. We count it on a monthly chart. We see it from the viewpoint of other traders. We compare our wave count to them. We look at a different scenario that may happen at this junction. We are thinking of a flat correction. All right. Okay. So we are expecting 1, 2, 3, 4, 5. What other trader will be thinking of? They'll be thinking of a zigzag correction because the first leg of their correction is 5. If they buy, the move is 5. But as things stand now, my friend, looking at it at this junction, we haven't got yet a 5 move down. So they may also start thinking of a flat correction because we haven't got yet 5 move down. But we are expecting 5 move down because of our wave count. So those traders may see that, they may say, all right, 1, 2, 3 at the end of the 5th wave. So they may also start applying to their 5th wave, which is this one. You see the exercise? They may start applying Fibonacci extension to their 5th wave, as we did to our own 5th wave, and highlighting that 138.2% Fibonacci extension level in the zone of $119 level. So they will be doing something like this because they see 1, 2, 3. They say, wow, that's a flat correction developing here. But that expectation may turn out to be 1, 2, 3, 4, 5. Because the area wave count is one step at a time. Looking at it at this junction as expecting 1, 2, 3, 4, 5. And those traders looking at it at this point, some of them may start thinking of a flat correction, expecting a bounce if there will be an expanded flat correction, at least to the top here, or even a little bit lower to form the area wave failure, or all the way to the 138.2% Fibonacci extension level of their 5th wave. And then those traders will be expecting their 1, 2, 3, 4, 5 move down to form their gigantic flat correction. Have I missed something? Is anything else that we need to add? Do you have any question or suggestion? Do you disagree with my wave count? Do you think that I was all over the place? All right. Do I sound tired? All right, let us know in the comment section. All right, and we'll pick it from there and see it again. All right. Another thing I want to add today is that sometimes you count the wave, and then a few days later, okay, it happened. Okay, this is a reality. You look at this, your own wave count that makes sense to you, and then you look at it again and say, whoa, 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 hold on a second, that was wrong. Have you ever experienced that? Let us know in the comment section. Okay, and then you feel like you want to scrap completely your previous wave count and see it from different angle. But the key to avoid trading mistake is not to use one time frame, and also to use a different viewpoint. You see it from the yearly chart, see it from the monthly chart, all right? You see it from your own viewpoint, you see it from the other trader viewpoint. You see your own forecast, which is your expectation. You check the expectation of other traders. Where are we now? What other trader may be expecting at this junction? Okay, what will be the scenario if something else happens? Those are the exercises you need to do to wake up the Elliott wave genius in you. So to go back to the beginning of this tutorial, I was saying to you, to wake up the Elliott wave genius in you, you count your wave of a higher degree, especially on a yearly chart. If you see those antenna or those shadow on top of the candlestick bar, just understand that something else has happened before. Or probably the 4th wave is already, especially here you see the long tail like this. Okay? You can call this now as a 4th wave because the price, see, it went down all the way here. All right? So on the yearly chart, though, a lot of times say it's the 3rd wave ending here. It's not. It's the 5th wave ending for those who start counting it from here. All right. If you have any question or suggestion, put in the comment section. And of course, I will be recording another video to answer your specific question. You count the wave on a lower time frame. You check it on the higher degree time frame. You start on a higher degree time frame, like a yearly chart. You go back to the nearest lower degree time frame to see the internal wave. All right. Either you start from the higher, you use the next lower time frame to see the internal wave, or you start from the lower time frame, the corresponding lower time frame, and you go to the higher degree time frame to validate it. Now, once you finish that, you need to go into the mind of other traders, see it from different angle, and be prepared. And be prepared. You are prepared. Okay. This will conclude our discussion today about Elliott wave genius, how to unleash the Elliott wave genius in you. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Happy trading to you all and speak to you soon.